All right, so how do we choose expiration dates when trading the wheel? Because if you're trading SPY, you can pretty much choose daily expiration dates all the way up to weeklies, monthlies. And the question I get a ton, like, how do we choose most commonly? Do we do a weekly or a monthly? Right now, inside my wheel portfolio, I have a bunch of different expirations from now until December. And I kind of want to talk to you about how I chose those different expirations and like rolling and things like that to clear up a couple questions I get quite often. First, here's the Robinhood portfolio. It's a portfolio I use just to trade the wheel. There's $39,421 in it. Year to date looks like I am at 11.68%. That is not all from the wheel. And that's something I want to talk about right now. The markets have been really, really good. They've been going up. And that's really a tough time for the wheel strategy. The wheel strategy thrives when the markets or a stock trades either sideways or down. It's a way to hedge against that sideways or downward movement. So right now it's been kind of hard to trade the wheel because I'm constantly finding myself rolling and rolling. But remember, guys, your portfolio value is your capital gains plus your premiums. So if your premiums are low and your capital gains are high, that's fine. Right now, my wheel premiums aren't outstanding compared to years past, but that's fine because my portfolio value is still doing pretty well, 11.68 for the year. You can see right now I have open calls on Apple, Starbucks, another one with Starbucks, because you can see down here I have 200 shares, and then a Google call, and we have 7/14, which is tomorrow. We have 8/11, which is about a month out. So we have 2 weeklies, a monthly, and then we see this Google out into December. And we'll talk about that as well when I get into my spreadsheet. The 3 stocks that I have right now, Apple, Google, Starbucks, 200 shares. The reason I have 200 shares is because it dipped down and I was able to pick up another 100 shares and drop my basis. I've also been trying to do so with Apple and Google by selling more puts on them, trying to lower my basis. Right now, my Apple position is probably my best because I bought those 100 shares right at the bottom and it just can continue to go up and up and up. So I can really get assigned anywhere with that Apple call. So the last time we spoke and looked at this portfolio and this spreadsheet guide is available to all of my patrons. If you want to jump down, first link in the description below. For a cup of coffee a month, you can get into the Discord and talk to us all and have direct access to me and the community in there trading the wheel and just talking money. I had a pretty bad month, but that's, again, we were rolling Google. Google just kept shooting up. You guys know the story. My last couple of videos have been about Google, and that has a lot to do with why I eventually down here decided to push Google from having a 6/16 expiration all the way out to December 15th. And we see this is like the first time that I've really gone out with Google, and here's why. Overall in the month though, 6.58%, 1.73. This value right here, 37.9, is what the portfolio value was at the beginning of that month. In this month, I held for an average of 7 days. We had 2 that I held for a little bit longer. Why did I move Google out to December 15th? I had strikes of like 113 and I was getting like not a lot of premium for that. The juice wasn't worth the squeeze in my opinion, and it kept continuing to go up. So I took the opportunity to roll. So I closed for $1,173, okay? And then for $40 less, $1,137, I was able to roll up from 113 all the way up to 125, okay? So that is a $2,200 increase in capital gain. If Google continues to rise, I will now know that I'm securing myself $2,200 more dollars. Even though I took a $40 hit in premium, like I said, more of a capital gains play. If Google was to retract a little bit and come down, which it has, if we come back and look at what it is right now, that position is up 11% for me, and Google currently is trading for 124, and it's having a really, really nice day today at up 4%. But I still can secure that, and if it was to retract a little bit and maybe go to 0, I still get to keep all of this premium here, so it's a win-win. Or I can pull the expiration date back. So instead of continuing to roll every week for a couple dollars and like, oh my God, am I getting assigned? I just pushed it up out of the money and said, you want to know what? I just don't want to think about Google anymore for a little bit amount of time. I want to think about the other stocks in my portfolio. And that's a time that you could do that. Now, if you're going to roll that far in advance, here's the caveat and here's kind of the information you need to know. If you are going to roll that far out, it is best, in my opinion, to roll out of the money. If you roll that far and you're in the money, there is a chance you might get assigned by the buyer of that option. I kind of knew that with this $1,100, really their break even for the buyer was up in the 130s. So by going out of the money, I think when I did this at the time, it was trading for like 123. By going out of the money and then that higher break even, I gave myself a $12 to $13 leeway of not having to even worry about getting assigned early until December. So that's really the first reason you might want to think about rolling out pretty far in expiration. And that's when you've been rolling and you can get yourself a pretty nice roll for a credit or a small loss, but severely increase your strike, which is going to increase your capital gains upon assignment. Next, we'll address these two Starbucks calls, one for 714 and one for 811. Why did I do this? Okay, so the last put that I got assigned when I got 100 shares more, that was at a basis of 102. So that's how I chose that 102 strike, and that's kind of the one that I'm playing right now. But my basis is still above 102, closer to 108, 109. So I wrote the second one for 109, knowing that I wanted to break even if I was to get assigned. But to get any real premium, I had to push it out. And also, I don't need to be managing 2 calls on Starbucks every single week. So there's another reason you might want to push out in expiration. I know some people have 3, 4, 500 shares of a particular stock. They'll ladder their strike prices and they'll ladder their expirations so they don't have all of their, quote, eggs in one basket, if you know what I mean. For me, I had my weekly Starbucks with 100 shares, and then I was able to push out a month with the other one, knowing that if it shot up, I still break even because it's going to be above my basis, and I really don't have to think about it on a daily basis. So that's kind of another reason for why I choose monthlies. Here's a third reason, which I don't have this in my portfolio right now, of why I might choose another one. With weeklies, you still have to manage those pretty much every day. You should be looking at them every day if you're trading weeklies. So when I'm at work, or if I know that I have access to my computer on a regular basis or my phone, I could check quick, I'm more likely to trade weeklies. The premiums are definitely better, right? Selling 4 weeklies is going to get you more premium generally than selling a monthly. And you can kind of combat against wild swings or things that might happen. But you need to be there to be able to manage them. And if you're not, like right now, I am a school teacher, I am on summer vacation. I am not by my computer nearly as much as I am while I'm at work. So I'm out at the beach, I'm out at the pool, I'm mowing the lawn, I'm doing all these things. I'm not looking at my computer. So that might be another reason I might push monthlies. I might push monthlies so that I just don't have to manage it on a daily basis. I'll take that hit in premium to know that I don't really have to think about it. And if I had another call or something like that, or maybe with this Apple Play, that might be the thing that I would do in the summer, or if I knew I was going on vacation or something like that, I was sick. This Google problem happened when I had COVID and I got assigned early because I couldn't get out of bed to manage my computer and manage my trades. So think about that management strategy. If you know you're going to be busy, or you know something's coming up, or you're just busy in general, monthlies might be a better play for you as opposed to weeklies. And I also think that monthlies are great for beginners that are kind of learning, because you kind of get excited if you trade weeklies. Like so much happens with the Greeks and theta and things like that, changing the price and the premium. You might get excited, you might get spooked. When you go out a month, it's nice and a little bit steady. You kind of get to watch things develop, and it's great for beginners. And that's kind of what I did when I was a beginner, just to like get my feet wet and get used to the premiums changing every single day, etc. Guys, real quick, you know you can get all this information free here on my YouTube channel, but I did write a full guide and journal to the wheel strategy. This is the 2nd edition. We read the reviews on Amazon. We went in, fixed some typos that were pissing people off. We changed the margins a little bit so they're a little bit easier to read, and really just added some new updated information. It's pretty affordable, guys. The reviews are really good. If you want to go one step beyond the free information here on the YouTube channel, you could pick this up. I'll leave a link down in that description, down in the descriptions below. And like I said, it's there on Amazon if you want to hold something. And yeah, here it is. Thank you. Thanks for supporting me and everybody else. And thanks for the reviews that pushed me to fix it. So some other fun stats, guys, in June. Like I said, $658. We can see $1,547 for the year. That's $238 for the year so far. Year to date, 4% increase. Like I said, 11% of the portfolio. So we got 4 here, another 6 and change in returns. And I know, because it's been happening every wheel video, someone's going to say, it seems like a lot of work when you could just put it in VTI is up 39 million per. Yes, I understand that, guys, but please zoom out, right? This is a capital gains. This also is a hobby. And in the last couple of years when I was making 12, 13% and the markets were down, this is a strategy for when markets are trading sideways and down, not when they're trading up. When things are green, the wheel strategy, it's not as great. So right now, although a monthly return of 0.74% is still going to be an extra 9 or 10% for the year, and everyone's going to think this is too much work. If it's too much work for you, then don't do it. Just don't do it. And if you have a problem, just text me. And if you don't have my number, then you don't know me well enough to judge me. So don't worry about it. Just do what you have to do. But I will definitely take an extra $1,500 a year in my pocket, even if I had to pay taxes on it. Last year, I made $4,000 on, like I said, a $20,000, $30,000 portfolio. If we look at each thing individually and what that's kind of working, Google, guys, I've been trading that now since July of 2022. So it's about a year. It dipped down last year. So with that play, I'm still down $1,000 on that position. I've upped my strike, right, of $3,300. That's what I would do if I got assigned at my 92. My basis lost from my actual basis, you could see up here, is 13,948. Right now, it's valued, my base is at 9,200. So that's where that number comes from. Here's the premium collected. The strike is 92 plus what my current strike is at 125. And here's my net position. This is going to be the worst of it. And I'm still up $355 in the last year, 2%. Not that big of a deal, right? Since May, this Apple has been doing really good for me. Since May, I've gained an extra 3% trading the wheel with Apple, $525 on $17,000 investment. Starbucks has been pretty good for me too, $435, almost 4%. Been trading that since May as well on an $11,000 investment. Amazon I've been messing around with, $576 on an average of $10,000 investment. That's good for another 6% on that. And then these are all the stocks that I've wheeled that are retired, like I said, that we're talking about inside the Discord. Here's all the chats inside the Discord, guys. You could check those out. I did ask if anybody had anything, recording a video, weekly, anything. Let's see what Jeff said. Can you tell us the pros and cons of going further for a credit and improving strike versus not going out as far at the same strike for a small credit? So I think I kind of answered that, Jeff, but like I said, if you are going to go out really, really far, you're kind of going to want to be improving something significantly, whether it is the strike or the expiration. But expiration really isn't changing your financial situation. So I will roll at the same strike a week, no problem. I'll do that all the time to buy myself some more time, especially if it's not too far in the money. If I start to get really in the money and I'm thinking, wow, it's almost, the buyer's almost got to assign me or exercise this option, that's when I'll start to think about really going out. But if you are going to go out, make sure, like I mentioned, that you're going to go you're going to go out of the money, right? If we go farther out, we want to go out of the money because we want to protect ourselves. That's why we roll, right? For more protection. And we protect ourselves with strike or with theta, time. So we go further out to protect ourselves with time, but if we can get a twofer, make sure we protect ourselves with time, but also change that strike so that we can change ourselves with strike as well. The big difference between rolling out 4 weeks and 4 months. Like I said, the month, month is like I'm busy and I can't get to it. If I want to do something extreme, especially if you're going to want to roll for a credit, you're probably going to have to do this a couple of months. And I'm not really going to go a year out with something like this. Just a couple of months, give myself some time. I knew by like December, hopefully things would settle out. Going into the fall, the market slowed down a little bit. That's kind of why I chose that December for Google. When to consider ignoring changing the strike. Yeah, so the strike, it depends on what your basis is. I don't care what the strike is as long as I'm above my basis. With Google, like I said, I got caught with my pants down, so I really needed to think about strike. But as long as you're improving yourself on a capital basis, on a positive capital basis, you're good to know. Maybe mention supply and demand, looking for different time frames depending on what the expiration is. So to be honest, I don't really look at supply and demand unless I'm day trading. When I am trading the wheel, I am only looking at basis, my cost basis for calls. Am I writing my strikes above my cost basis? And fair value. Am I happy with being assigned 100 shares at this price when I'm writing puts? Supply and demand is a little short term for me. And like I said, even for a week, I think supply and demand is a little short term. And I would more use that when I'm buying options, maybe for looking at leaps. If I'm looking at a monthly chart and I see some supply and demand and I want to play a year play like that, or if I'm day trading on the 5 minute. Excited about this video. I've only purchased weekly so far because I feel more comfortable, but there's nothing to support that feeling. Yes, there is. If you feel comfortable doing it, then it's the right thing. You have to do what works best for you. And that's what I said back to my schedule. It's not all about premiums. It's not all about strikes. It's not all about expirations. It's about putting yourself in the best position that you can to be the most successful. Guys, I hope that helped. If it did, please consider giving the video a thumbs up. Get down in the comment section below. I would love to get some feedback and some dialogue going. Check out the Discord if you want to hop in here and have direct access to me. Or check out the book if you hate my guts and you don't want to talk to it, but you do want to learn a thing or two. I'll catch you on the next video.